In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Snap soars in after-hours trading as its user base stabilizes. We'll talk about how the social networking platform is attempting to stage a comeback. Plus, a big Apple departure. Angela Ahrendts made a big splash when she left Burberry to run Apple's retail operations. Now she's leaving Apple. We'll tell you about her replacement. And tech investor Roger McNamee has gone from one of Facebook's biggest early supporters to one of its most vocal critics. He'll join us to explain why he's speaking out against the social network in a new book. But first, to our top story. President Trump's State of the Union speech promises drama as another shutdown beckons. The president has hinted at news, a proposal on drug prices, even summits with China and North Korea. Meantime, choosing greatness, quote unquote, is the theme. Ahead of the address, we are joined by Congressman Steny Hoyer, who's the House Majority Leader. Congressman, thank you so much for joining us.
Thank you,
What
Emma.
do you want to hear from the president tonight, and what do you expect to hear?
Well, what we have heard in the past has been confrontational and divisive, in my view. I'd like to hear something along the lines that they project as we're going to hear, and I hope we do, and that is about how we can come together, how we can compromise, how we can agree on moving forward, and moving forward on the issues that working people in this country care really about and what the election was about. For instance, pre-existing conditions. A lot of Republicans said, oh, they wanted to protect pre-existing conditions. This administration over the last 2 years has done everything to undermine the availability and accessibility of health care to the average Americans. They passed a tax bill that undermined working Americans and greatly advantaged the wealthiest in America. They shut down the government, which hurt a lot of workers. 800,000 people put out on the street, essentially. 400,000 called back, said you have to work, but by the way, we're not going to pay you. It's those kinds of things where we see wage stagnation, lowest wage increases in over a year, happened last month. So we hope to hear some positive things about how we can cooperate, how we can work together, how we can invest in the economy, invest in infrastructure. Yes, bring prescription prices down. He said that in the past, and what he offered, frankly, had no legs. So I hope to hear something positive. That's not necessarily my expectation, but that's what I hope to hear.
Now, according to Bloomberg sources, the president has decided not to declare a national emergency when it comes to border security. Is that welcome news to you?
It's welcome news, and I think what he recognizes, the political reality is that Congress, in a bipartisan way, would oppose such an action because there is no emergency at the border, as he would reflect. And in any event, that's really where the Congress working with the president should decide, and I'm sure he's decided that the Congress would not support him in that effort, and so he's not going to take it. I think that's welcome news for everybody. There is no crisis at the border. There's a challenge at the border, but not a crisis.
That said, there's still some sort of compromise that needs to be made between Democrats and Republicans. What do you think is the likelihood we find ourselves in another government shutdown?
Well, I hope we don't. I hope if we can't reach agreement by this Friday or a very, very early Monday of next week or over the weekend, I would hope that we would have an extension of government's authority to operate. Shutting down the government of the United States is a negative, stupid thing to do, which causes great disruption, not only among federal employees, but among all those who are served by the federal government. And our allies around the world must think something's wrong in America if it's shutting its government down. So I would hope that if we can't reach agreement by Friday or over the weekend, that we at least extend government authorization for another 2 or 3 weeks while we're negotiating.
Now, Representative Clyburn told Bloomberg earlier that he supports a smart wall. Is there any kind of wall that you would support, that Democrats would support?
I guess the definition of wall is in the eye of the beholder. Clearly, We've supported fencing in the past. Clearly, we want to make sure the border is secure. We think, as Representative Clyburn said, Whip Clyburn said, we're for a smart wall, and we've offered substantial investment in technology, substantial investment in ways to see what a truck or a car contains without going invasively into that truck or car. More personnel. Humanitarian concerns, healthcare concerns, housing concerns at the border, making sure people are safe. So we're supportive of investment in making the border secure and safe. What we don't think, and what most people don't think in the United States, is that building a 30-foot wall, which can people can go over it, they can go around it, they can go under it, which we've seen, is not the smartest investment to make for border security. But obviously, we need to get to an agreement, and I'm hopeful that we do.
Stacey Abrams will be giving the response to the State of the Union tonight, which is a task of extraordinary prominence. Where do you see her future in the party?
Well, I think she's an extraordinarily able legislator, extraordinarily effective candidate for governor. She didn't win, but everybody that I talked to says Stacey Abrams is one of the smartest, most effective, best politicians that they know. And I think she has a great future ahead of her, whether she runs for the United States Senate or runs for governor again, or whatever she might do. She's obviously an extraordinarily able individual.
We've been covering progress toward potential regulation of big tech companies, privacy legislation. What do you want to see there?
Well, I think that they're clearly all over the world, people are concerned about the privacy of their information, whether it's financial information, medical information, other information, and while we want to be able to communicate with one another, while we want to have open communications and obviously in our country, free communications, we also are concerned about security. We're also concerned about the security of our own personal information, that it is not used for purposes that would harm us. So I think when you deal with this technical issue, it's a very complicated one, but I think we need to do it. Obviously, Europe is ahead of us on this, or some people might say behind us, but in any event, I am sure that we're going to have very substantial hearings into this issue, both in the House and in the Senate, to determine what is government's role in this, how do we protect people from having their information used against them.
Now, as we go into tonight, the president is expected to tout what he sees as his success on the economy. Where do you think he has and has not succeeded when it comes to the economy?
Well, frankly, the growth was greater really under President Obama. Now, what happened was the policies that they were pursuing under the Bush administration led to the deepest recession that I've experienced. I wasn't really experiencing the Great Depression. But that was the greatest economic downfall. Obama brought it back. Obama had a growing economy. President Trump inherited a growing economy, and it has grown somewhat. But the things he said was going to happen have not happened. We've seen factories leaving, notwithstanding his comments in the campaign. We've seen his trade policies confuse individuals and worry our trading partners, and very frankly not having the result that he said it would have. So, and again, I mentioned the tax policy earlier with respect to what he promised during the election. He's going to give a tax boost for the middle class, but in fact what he gave was a tax cut to the wealthiest corporations and wealthiest people in the country. So I think his promises have not been kept.
Congressman Steny Hoyer, thank you so much for taking the time to join us.
You bet.
Appreciate you stopping by on Bloomberg.
Thank you.
Meantime, Snapchat reported fourth quarter revenue that exceeded analyst estimates. The results signal the company is figuring out how to squeeze more money out of a stagnant user base. But remember that Snap has lost more than half its market value since a March 2017 initial public offering. For reaction, we've got Jitendra Rawal with Bloomberg Intelligence here in the studio. And in New York, we've got Roger McNamee, co-founder of Elevation Partners, also out with a new book today called Zucked, about what he calls the Facebook catastrophe. Roger, we're going to talk about your book a little bit later. But first, I want to get started on Snap. What's your take, Roger, on these headline Snap numbers that users are stabilizing after a few periods of decline?
So I think it's great news whenever you get something positive out of a company that's competing head-to-head with Facebook these days. Facebook is so powerful, and they have choked off almost all startup activity anywhere near their space, as has Google. And when I see Snap, I worry enormously because obviously Facebook has been integrating Snap-like features into Instagram for a better part of 2 years, and that's had a huge impact on the audience growth, whereas Instagram, is growing very rapidly and Snap is not. So knock wood, I still think Snap's situation is perilous, and I worry very much about their viability long term.
Integrating Snap-like features is perhaps a kinder way to put it. Jitendra, others would say blatantly copying Snap's features. What do you think are the highlights that?
Well, the expectations going into the quarter were low. Everybody was expecting a decline, but we saw flattening. The guidance suggests there won't be a sequential decline next quarter as well. So the user growth story has not really changed, but we need to change the narrative with Snap a little bit in context of the valuation. This company went from $31 billion peaking enterprise value after the IPO to almost $5 billion in December. So in context of the valuation, three things are working for them. One is valuations are more reasonable. Second is the engagement among the Gen Z and millennial is still intact. And the ARPU is like 1/10 of that of Facebook, half of that of Twitter. So they can squeeze more money out of that. And lastly, we're seeing that the comps, especially on the pricing, ad pricing that has come down drastically, are easing a bit. So they have some revenue growth potential over here, especially if they pitch themselves as a TV for millennials and Gen Z versus like going all out on Facebook. So expectations-wise, I feel they can outgrow the revenue growth that's projected right now.
So, Roger, what do you think is Snap's long-term future if Facebook and Instagram continue to integrate Snap-like features as you say? I mean, what does Snap look like in a couple of years?
Well, I think that remains to be seen. I think the challenges of the company has obviously been maintaining stability on the inside as well as growing the audience on the outside. And I look at this and I just think it's a really hard time to compete with any of the big three, being specifically Amazon, Google, and Facebook in their core markets. They have these massive moats of data and network effects that make it incredibly hard for companies to sustain anything. And I totally take Jitendra's point about the valuation and the fact that expectations have been really low. Even so, I think the valuation and the expectations may be appropriate if you take a long-term view, simply because of the challenges of competing in this space, which is not to say you can't make market, but just money from this price, but just that you want to be trading it, I think, not viewing this as the money you're going to send your children to college on.
All right, Roger, stay with us. You're going to talk about the big challenge that Snap is facing coming up. Roger McNamee, don't go anywhere. Bloomberg's Jitendra Wawal, thank you so much for weighing in. From ally to opponent, coming up, we will talk about Roger McNamee's new book on the rise of Facebook and the danger he says it's posing to the world. That is next. This is Bloomberg. 15 years ago, on Monday, a young Mark Zuckerberg launched what is now known as Facebook. And just a couple of years later, Roger McNamee, an early investor in the company, became a mentor to Zuckerberg. But since things have changed, McNamee has gone from Facebook backer to vocal critic. And this is from a 2016 memo that McNamee sent Facebook's leadership before the election, the U.S. presidential election, was even called. Recently, Facebook has done some things that are truly horrible, and I can no longer excuse its behavior. Facebook is enabling people to do harm. It has the power to stop harm. What it currently lacks is an incentive to do so. McNamee's journey is laid out in his new book titled Zuck, Waking Up to the Facebook Catastrophe. He joins us once again from New York. So, Roger, that was before the election was called. 2 years later, we've confirmed that Russia meddled in the election. Facebook has admitted what a big problem fake news, in fact, is. And yet the company still reported a record profit, reported user growth. Is there a fundamental mismatch between your concerns about Facebook's harm to the world, the media's concerns about privacy, and what the public really wants?
Well, here's the thing I would say, Emily. With respect to the earnings, it makes total sense that they would have had a blowout quarter. Remember, if you're an advertiser, you have to go where the audience is. And Facebook has the largest audience on earth. It has the best targeting. Its ad product is second to none. I'm trying to introduce people to a book. If I want to reach people with a book about Facebook and Instagram, there's really nothing quite like advertising on Facebook and Instagram. So I'm not even remotely surprised they had record earnings. The one thing that I think every analyst would note is that there are a lot more ads in your news feed than there used to be. In my case, every fifth or sixth post is an ad. That's probably twice as many as I would have had a year ago. And I don't know how many ads they can put in the news feed before it really harms the experience. And candidly, I like ads in Facebook, so I don't mind them, but there are an awful lot of them.
But it's not just about the profit, it's about the user growth. They saw daily active users grow in the U.S. and Europe. I
would like to suggest that a tad of skepticism would be appropriate there. You may remember, I don't know, it was 8, 9 months ago, they told us that they had blocked 1 billion inauthentic accounts from being formed on Facebook. When you're blocking 1 billion inauthentic accounts, you have a lot of opportunity to let a few through if you need to. I mean, Facebook also told you in the quarter that before very long they're going to stop reporting Facebook as a broken out piece. They're going to integrate it with Instagram and WhatsApp. I don't think they're doing that because the numbers at Facebook look great. We also know from Nielsen that usage on a per user basis is down dramatically over the past year. I think the number is like 20% or something. What it is doesn't matter so much, other than people have changed their behavior. And you saw this in the 2018 midterms, where the effectiveness of disinformation was radically reduced with at least a portion of the Facebook audience. And that was really encouraging. I mean, I look at these things and I go, I understand why the stock's up. The problems I'm talking about aren't rearward-looking, they're forward-looking, and we really do need to address them.
But you're suggesting Facebook could be juicing the numbers and not shutting down as many fake accounts as they could?
I'm saying, no, I'm not suggesting anything. I'm simply saying you can't exclude that when let's think about this in the context of other things. Facebook has, these automated systems for getting rid of hate speech. And, what they define as hate speech has a large influence on what the percentage is of successful capture. And my only point is, it's a black box. We can't audit it. We do not know. Facebook has huge incentives to make the numbers appear like they're rising. And I just would say, if you look at their behavior over the past 2 years, what is the argument for taking the number at face value? I don't see one.
Right. So Facebook did release a statement about your criticism, saying we take criticism seriously. Over the past 2 years, we've fundamentally changed how we operate to better protect the safety and security of people using Facebook. The reality is Roger McNamee hasn't been involved with Facebook for a decade. What's your response to that?
Well, really simply, it's demonstrably true. I have not been involved for at least 9 years. But let's look at the front half of that, because I'm an analyst. I don't need to be on the inside to be able to observe things that I read in the newspaper and understand what they mean. But they're saying that they're protecting users. Well, last week, Apple expelled Facebook for a day, and Google as well, for having so-called research applications that they tried to sneak into the App Store through a private portal. And those apps were spying on the users who used them, including a significant percentage of minors under the age of 18. I wouldn't call that protecting users. The prior week, Facebook had a legal case accusing it, apparently without conflict, of essentially encouraging children to spend lots of money on in-app purchases in games, in some cases up to thousands of dollars on their parents' credit cards. And they knew this was going on and did nothing to stop it and tried to pretend as though that wasn't a problem. I would say those are two very disturbing things. Also last week, Facebook kicked off ProPublica out of it from doing the audits of Facebook's political advertising site. They were just going in to make sure that Facebook was doing a complete job, and they stopped letting them do that. Also last week, Snopes, the fact-checking site, gave up working with Facebook and said it was basically they were impossible to work with. So I would actually argue that the current evidence suggests that Facebook is not making progress in a material way, and there are new issues that affect Facebook, Google, and others related to, say, smart speakers and smart video devices and smart televisions, smart cars, that suggest that the problems we have today with privacy are tiny in comparison to the ones that are coming right now if you put Alexa-based devices or Google Home devices or Facebook portal devices into your house.
Now, Roger, I sat down with Sheryl Sandberg last week and I asked her point blank, why should anyone trust Facebook? Why should anyone trust her? Take a listen to what she had to say.
It has been a challenging time for Facebook, and we need to earn back people's trust with the steps we take. We've changed our profitability because we want to take the hard steps to protect people on the platform. And you see us doing that. You see what happens with elections, the U.S. midterms, and around the world, fake accounts, decreasing the distribution of fake news. These are hard and ongoing problems, but we are determined to do the hard work and keep doing it.
Now, Roger, Facebook has hired thousands and thousands of people to double down on safety and security. They say they've changed the algorithm in the news feed to tilt it more towards personal news rather than world news. I know none of that is enough for you. If that's not enough, what should Facebook be doing? And if Facebook isn't going to do it, what should users in the government be doing?
Yeah, Emily, here's the way I would tell you I think about the problem. I've studied this now for 3 years to try to understand why this stuff happens on Facebook. Remember, I'm still a shareholder, and remember, this was one of the crowning achievements of a long, long career, and I'm really proud of Facebook, and it really bothers me that this is not going well, and it's obviously not in my economic interest to be a critic. So I'm convinced that the business model is the problem. It's the problem at Facebook. It's the problem at Google. They essentially have this advertising business model that depends on monopolizing the attention and manipulating the attention of the user. In order to do that, the algorithms are tuned to focus on emotional things that trigger outrage, that trigger fear, or tickle people with rewards of some kind. And, you know, when you're doing that for long enough, people first develop a habit, then they develop an addiction, and once they're in an addiction, they're vulnerable to manipulation by bad actors on the outside. And until you change the business model, that's there.
We could talk about this for hours. We're going to have to leave it there. We're going to hear a little bit more from you after the next break. Roger McNamee sticking with us to talk about other hot topics in tech. More coming up. This is Bloomberg. Technology. I'm Emily Chang in San Francisco. Disney reported first quarter results Tuesday that beat analysts' expectations. The earnings beat comes as the company pushes further into streaming with plans to launch its own online video service, Disney Plus, later this year. Joining us to discuss, we've got Bloomberg Intelligence's Geetha Ranganathan and Roger McNamee, longtime tech investor and watcher with Elevation Partners. Geetha, first of all, what are the headlines that you would pull out here?
Emily, as you mentioned, of course, the big magic word there is direct-to-consumer, is streaming. And this is really a transformational year, a year of transition where they're going to be making all these investments for their big product, the Disney Plus service, which they're going to launch later in calendar 2019. But I think as far as fiscal 1Q results go, it was a pretty solid print. The theme parks there were a real standout. It looks like all of their investments are really paying off. They had a recent price hike. There was 10% adjusted operating income growth in that segment. And then again, the media network segment also holding up pretty well. But the company management definitely bracing us for losses in the direct-to-consumer segment.
Roger, what's your take on what's happening in the streaming wars? These companies like Netflix and Disney spending billions and billions of dollars on original content, all to have that direct and exclusive relationship with the consumer.
I mean, it's a great time to be a consumer, right, Emily? I mean, there is so much fantastic content being produced right now. And what's interesting is how willing consumers have been to unbundle their video while maintaining lots of different relationships. There was an article of faith that the cable model worked in part because if you broke it up into pieces, the friction would cause people not to spend as much money. And I don't think that's actually the case so far. And I don't want to pretend like I know how this is going to turn out. I do think that this massive spending on original content is going to run out of gas somewhere. That is, at some point, you'll hit saturation of how much can really drive subscriptions and how much penetration you can get for each platform. But we're not there yet. And until then, I think consumers are the biggest winners out of all of this. You know, it's hard for me to imagine Disney not being successful because of their control of unique content targeting pretty much every bracket age-wise, but especially little kids. And at the same time, you know, they're coming at this much later than obviously Netflix and Amazon and a bunch of others who are not going anywhere. So, you know, consumer wins.
With the launch of Disney Plus, Disney also pulling its content from Netflix. Geetha, what do we know about what we'll actually see on Disney Plus?
Yes, so Disney Plus, it's actually going to be a pretty slow ramp up in terms of content. They are going to have a very deep library of their own IP, of the Fox IP. They're going to have all the Marvel, Pixar, the Star Wars content. And what they're actually doing this year is they're pulling their content, as you mentioned, off of Netflix. That is going to result in some loss of licensing revenue. And along with all of the films that, so Captain Marvel, which they release in March, is actually going to be the first film that's going to be on their service, Disney Plus service. So they're going to see some loss of licensing revenue from Netflix in addition to the investments.
Roger, we've heard polarizing views on Netflix. Some people think it'll hold on to the crown, will remain the streaming king or queen, if you will. But others saying that Netflix could become the AOL of OTT. What do you think?
I haven't a clue, but I will tell you this. Betting against Reed Hastings has been a terrible thing to do. And there have been several times in the history of Netflix that I just didn't get it. And I learned my lesson. I'm basically going to assume that he'll pull it off. The thing I would observe is that Netflix has a data advantage. They really have a sense of customer preferences that has to be economically game-breaking compared to Disney and others. Disney will have a content advantage because the Pixar library, the old Disney children's stuff, obviously the Marvel line and some of the Fox stuff, they're going to give them a very full set. And because of the way Disney prices things in the purchase market, I think that there is a lot of demand for a lot of streaming, particularly of the Pixar and Disney animation. And it's going to be interesting to see how this plays out, but I would definitely not bet against Netflix. And if the stock gets creamed, that will almost certainly, from my perspective, be a buying opportunity.
All right, Roger, hang on. I want to ask you about our next story as well. Bloomberg intelligence analyst Geetha Ranganathan. Geetha, thank you so much for stopping by. Apple has said its head of retail operations, Angela Ahrendts, is leaving the company after holding the top job for 5 years. The company has appointed Deirdre O'Brien, who runs human resources, to take over for Ahrendts as the senior vice president of retail and people. Bloomberg's Mark Gurman joins us with more. Roger McNamee of Elevation Partners still with us. Mark, what do you make of this move?
This is a massive departure for Apple. This is actually the 6th senior vice president, which is Apple's top tier of executives, to leave the company since Tim Cook became CEO in 2011. So averaging about, give or take, a departure a year on that top tier of executives. She, since coming from BlackBerry in 2014, really transformed Apple retail into what she called the new meeting place over where people would typically meet, which was Starbucks. So she really put her fingerprints all over the stores. You see the new sliding glass design like we've seen of the one in the flagship store in San Francisco in Union Square. She's remodeled dozens of stores across the world, taken retail stores into new markets like the United Arab Emirates and Mexico and Thailand. So she's definitely made an impact in those last 5 years. So a very, very significant departure for the iPhone maker today.
Angela Ahrendts made a big splash when she left Burberry to join Apple. Roger, look, it's no secret that Apple's in sort of an existential crisis as iPhone sales slow down, and there are questions about the next big thing. What is your sense on whether Apple can rise out of it?
So I want to put forward what may be an unusual point of view on this. But I don't think Apple's facing an existential crisis at all. I think that the iPhone was probably the single most successful product in the history of technology, maybe a history of anything. And eventually it was going to stop growing because you're going to run out of market. And I believe that Apple's next pivot, which is well underway, is this pivot to services. And obviously retail is a huge part of that. Having a place where you can go and get things serviced, having a place where you can go and learn about the features and services has proven to be an enormous advantage. And I'm with Mark on the issue that Arentz's work there was fantastic. What I would look at is the following. I just think Apple has focused for years on a growth bundle, focused on the App Store and iTunes. And now in a saturated market, they need to focus on the place where they have the greatest competitive advantage. And that would be in security and privacy, where the iPhone's advantage over all Android phones is so gigantic that, in my opinion, it more than makes up for the difference in price. And I think as people look at what's going on with Facebook, with Google, with all of the things that are in the smart device world, with Alexa and the like, you're going to see Apple pushing the privacy thing very successfully. And people will sit there and go, look, all else being equal, I would rather have a company looking out for my interests than not, and that would clearly be Apple.
Mark, tell us a little bit about Deirdre O'Brien and what you make of the fact that she's going to be running people and retail, which are two big jobs.
Yeah, Deirdre O'Brien is one of the most trusted executives of Tim Cook. She's been at Apple for now about 3 decades. And prior to becoming VP of People, which is their term for basically head of HR functions, she was one of the top operations and sales executives at Apple. So she was the one who was helping churn out products, at this rapid pace, getting them into distribution hubs, getting them into stores. And she's really the epitome of what Apple has pretty much done better than any other company at this point, is getting its products physically into the hands of consumers. So it makes sense for her to sort of go back into more of that operational role in terms of being a retail head. However, her position coming from operations is a departure from what Apple has tried before with retail chiefs, and that is all 3 of its previous retail heads coming from a retail company beforehand. Ron Johnson, he was at Target. After Apple, he was CEO of JCPenney. Angela Arendt's obviously from Burberry, and the person in between, John Browett, he was at one of the Best Buy, you can compare it to Best Buy in the United Kingdom, and still works in retail in Europe right now, I believe, for a women's clothing company, another fashion house. So this is something new for Apple, putting an operations person, a people person in charge of retail, and it's a new formula for them. People have complained about Apple's retail operations in the past, and this might do the trick. And she really is the epitome of what Apple's done best as a company. And there's plenty of things to criticize Apple for, but the stuff that they've done best, she's been in charge of, or at least a big part of.
All right, Bloomberg's Mark Gurman. I know you'll keep us updated as this develops. Roger McNamee, you're sticking with me. Well, there is a sign that demand for Super Bowl ads may be peaking, along with the size of the audience. Researcher Cantor Media estimates that CBS took in $382 million in ads during the big game. Compare that to when NBC got $408 million last year. Meantime, ratings show the viewing audience was slightly over 98 million, the lowest since 2008. Coming up, Coda, a startup that aims to clean up documents and spreadsheets, has gotten a lot of attention from high-profile VCs and investors. Now it is making its public debut. That's next. This is Bloomberg. Coda, a startup that aims to transform the workplace, made a big splash, raising $60 million from high-profile investors, including Greylock, General Catalyst, and LinkedIn CEO Reid Hoffman. Back in 2017, the platform launched in beta, gaining thousands of users, and now it is making its public debut. Joining us to discuss, Shishir Mehrotra, CEO of Coda, and Hemant Taneja, partner at General Catalyst. So you actually started working on this 4 years ago,
yeah, that's right.
And you're just launching today.
Yeah.
You call it a new kind of document. It must be pretty special if it was 4 years in the making. What do you mean by a new kind of document?
Yeah, it's a new type of doc. I mean, it starts with pretty simple set of observations. We think that in this world full of applications, every team we see seems to run on documents and spreadsheets, and all of those technologies and platforms were invented 40 years ago. So we decided we'd start from scratch, build an entirely new type of document. It blends all the best parts of documents, spreadsheets, applications all together into one new surface, and the goal is to allow anybody to make a doc as powerful as an app.
So it's not quite true that the document was invented 40 years ago, or last invented 40 years ago, because Google's got Google Sheets. I mean, Microsoft's obviously in here. You've got Slack with its enterprise software. So, Hemant, what attracted you to this?
Yeah, I think Shishir is doing a good job describing the product. But when you really try the product, you get to start thinking about the use cases that can be used here. The document itself, the metaphor has changed. It's really more of an app. So when you are small businesses today, it ends up leveling the playing field for you in many ways. Rather than having complex packaged software, you can actually have all your workflows beyond there. One of the questions I ask Shishir a lot is, how many companies are fully running on Coda? And it's amazing how many of them are now moving from building documents in these old pieces of software to these brand new Coda metaphor.
But then who's the competition? Is it Microsoft Word? Is it Google Docs?
It's a wide set. People use Coda in as simple use case as taking notes in meetings as an alternative to a document, all the way up to things that you would normally use spreadsheets or databases for, where they're organizing, maybe it's inventory or customers, all the way up to building real applications where you can build systems that can run whole businesses.
Now, you were the head of product at YouTube. Big job. What did you bring from there to here?
Oh, yeah. I had a great time at YouTube. We were there 6 years. Probably two big things. One is the way we worked. So we ran YouTube basically on documents and spreadsheets. And a lot of how we use those tools inspired a lot of the core metaphors in Coda. And the other one is how the ecosystem worked. The way I often talked about YouTube was that online video would do to cable what cable did to broadcast, and we'd go from 3 channels to 300 channels to 3 million channels, and there'd be all these new makers that were all of a sudden qualified to build high-quality video. So similarly, what we think is happening in software is that there's this set of makers, the people that are problem solvers, tool makers that can take the problems they see in front of them and build their own solutions. They just need a new set of building blocks to be able to do it. So our goal with Coda is to empower that group of people and sort of similar to what we did with YouTube, allow them to build the tools that work for them.
And these people sit in every company.
Yeah.
So, Hemant, more broadly, General Catalyst was an investor in Snap. What else are you looking at? What is hot? What is not?
This is a tremendous time for innovation. There's a lot going on in fintech. There's a lot going on in healthcare. And then, akin to Coda's theme, small business software and companies that are leveling the playing field for small businesses is a massive theme. We're early investors in Stripe. You've seen Amazon Web Services, and what Coda is trying to do now in terms of a document platform. These are also massive opportunities.
Shishir, you're also on the board of Spotify, which did a direct listing. Slack's aiming for a direct listing. Do you think that was the right call for Spotify? Well, I'm sure you think it was the right call, but how has it worked out? And is it the right call for Slack?
Well, I'm excited to see what happens. I think it's obviously only works for companies that have you have to have a few characteristics. It has to be a big enough brand that people understand you, and you have to not need to raise capital. It's an important criteria. But if done well, it can be really impactful. I mean, it's much more cost efficient, but also it levels the playing field for your existing employees and your existing investors with the new investors. So I'm pretty excited to see what happens with Slack.
What are you expecting in terms of exits?
The things that are really interesting about Slack is it's an enterprise company that can go do a direct listing. Like with Spotify, you would have thought it was a consumer brand and it made sense. But the fact that Slack is this consumerized company, it'll be curious, interesting to see what happens there.
Yeah.
All right, well, we will see. Thank you both, Shishir Mehrotra, CEO of Coda, and Hemant Taneja of General Catalyst. Thank you so much.
Thank you
for stopping by.
Yeah.
All right, coming up, Roger McNamee back with us from Elevation Partners. He will talk about the final tech landscape and headwinds he sees coming in 2019. That's next. This is Bloomberg. Amazon appointed former Walmart executive and current Starbucks COO Rosalind Brewer to its board. Brewer was CEO of Walmart's Sam's Club business from 2012 to 2017. She then joined Starbucks, where she also serves as a director. Brewer is the fourth woman on the Amazon board out of 10 and the only Black director. Still with us in New York to talk about the big tech landscape, author of Zucked, co-founder of Elevation Partners, and always someone who has a lot to say, Roger McNamee, back with us. Roger, I'm wondering if your criticisms of Facebook extend to Google and Alphabet and Amazon, which are other companies that have built their businesses by collecting our data.
So, Emily, Google is, I would say, every bit as bad as Facebook on data privacy, and I think you can make the case that they're likely to be much worse going forward. I think the only place where Amazon is in the same level for this kind of stuff is in its new ad businesses, where it is starting to join the party. The issues with Amazon are largely confined to two problems. That, their Alexa businesses are obviously in surveillance, and they're using that for their advertising. That's a big threat. But they also have the issues of just classic antitrust in retail. And so I think of them as mostly in a different thing, because the Alexa business and the advertising business are still relatively small. Google, by contrast, I think is just hoovering up data everywhere. And I think they're very active in artificial intelligence, where their products are very strong, but where I think the company is not taking responsibility for making sure that no harm is done. One of the big issues we've had in early versions of AI is the importation of biases that exist in the real world. For example, in job searching, biases against women or against certain races. Those kinds of things which exist in the real world are somehow being imported into AI because they're using the real world data sets to inform it without adjusting for implicit bias. So I think Google's got a lot of issues going forward from a regulatory point of view, particularly in Europe. And, so I think that's the only negative I see in the outlook for the tech industry in 2019 that is specific to tech. Like 2018, I just think the uncertainty in the world, the fact that the administration is going for nationalism over international trade, I think that's incredibly disruptive to the whole tech sector, but frankly to the whole economy. And that makes me very nervous. And I think almost any day you could wake up with a piece of news that just scares the bejesus out of the market. And I don't know how to factor that into my thinking. I'm older, so I'm conservatively postured. Younger people, I think, could look at this a different way.
I've got a chart here in my Bloomberg that compares the market caps of the top four companies: Apple, Amazon, Google, Microsoft. It's certainly notable because Apple and Amazon have pulled back from that $1 trillion market cap. Microsoft is now in the lead. How do you see this changing in 2019? I mean, obviously you see Facebook's business model under threat, but do you see a great sort of reordering in the hierarchy, or is it going to be more of the status quo? To
be clear, Emily, I see Facebook's business model and Google's business model as the threat. I think the hard part is that they aren't under threat, that in fact they're doing a very good job of, placating regulators and placating users and placating investors. So, yes, the stock has had some really difficult days, but it's marching back now. The numbers in Q4 were strong. I think some of the comparisons in the coming quarters will be a little bit more difficult. But at the same time, I think that Facebook is, frankly, still in control of its destiny. And, if you're me and you're an activist and you're trying to persuade people that this is an existential threat, that's very frustrating. But it is how things are. And, what I'm saying to people is, listen, it's much more important to protect your children. It's more important to protect your own mental health. It's more important to protect democracy. It's more important to protect privacy and the economy. Let's make the tech world more competitive. Let's go back to making products that empower us as opposed to products that are taking away our dignity.
Anything could really unseat any one of these five companies, and we probably only have 30 seconds left.
No, not anytime soon. Without antitrust regulation against Google, Facebook, or Amazon, there's no chance. These guys are incredibly well positioned, and right now we live in a world of deregulation where there's nothing to slow them down at all.
All right. Roger McNamee, Elevation Partners, out with a new book called Zucked, Waking Up to the Facebook Catastrophe. Roger, thank you so much for joining us on the show, spending an hour with us. We will be watching the progress on the book from here.
Just remember, Emily, we have more control here than we know.
All right. That does it for this edition of Bloomberg Technology. Of course, we're live streaming on Twitter. You can check us out at Technology and follow our global breaking news network, TikTok, on Twitter. This is Bloomberg.